My dear friends and investors, welcome back to the monthly video on markets and investing. But before I start, I'd like to wish you and your family members a very happy Dashera, and I hope all of you have a great festive season. And talking of the festive season, the feedback that we are getting from the retailers and especially the e-commerce retailers is that this festive Diwali or season is likely to be a blockbuster season as far as consumption trends are concerned. In the first few days of the big sale that the large e-commerce platforms uh, started, the numbers are simply staggering. Almost 60% of the forecast for the entire festive season has already been achieved. And in the first 4 days of the sales itself, e-commerce sales clocked almost 25,000 crores, which is almost 30% higher than last year. And we still have many days left going into the festive sales. So, what is likely to be a blockbuster festive spending season after 2 years of COVID? I think there is a lot of pent up demand and purchasing power that we will see in retail sales number in this quarter of the year. Also, when we look at credit card spendings, it is also showing a terrifically strong trend. And that tells you that consumer spending is really back with a bang. We also had September auto volumes that came out, and we have seen that the numbers are very strong. We have seen growth, especially in passenger vehicles, in two-wheelers, and we've finally seen a significant improvement in medium and heavy commercial vehicles. That tells you that the industrial cycle is also starting to move very strongly. Another big significant event of last month of significance is the rollout of 5G. The two top telcos in the country, both Reliance and Bharti, announced the launch of 5G, and both have spoken about covering almost the entire country, Jio by December 2023 and Bharti by March 2024. Why is this a watershed event? Well, 5G was expected, but I think 5G will open up significantly new opportunities by accelerating the already very successful move towards digital India. Whether it is e-commerce, whether it is data, whether it is consuming content at high speeds, and several other applications are likely to boom post the launch of 5G. But what is most important that I would like to bring to your notice is that this time Reliance Jio has developed its own 5G technology, and that is very significant. And the second consortium is TCS with Tejas Networks. So you are now seeing that instead of completely relying on foreign technology, Indian companies are capable of spending and creating indigenous high-tech capabilities, which shows the maturity of the technology curve in India. If you remember, I had spoken about India's capability in vaccine manufacturing and how it strategically helped India to pull out of the COVID mess independent of any imports of vaccines. And therefore, while it was indigenous vaccine technology during the COVID crisis, and now 5G technology, where Indian companies are developing in-house capabilities in many of these important frontier technologies, says a lot about the maturity and capability of India. Coming to some other good news that we have seen of late, and it ties into the fact that despite a very challenging macro environment that we have seen outside of India, we have spoken about this in terms of rising inflation and therefore central banks becoming very aggressive about raising rates, that leading to fears of recession, very high energy costs, supply chain dislocations, geopolitical uncertainties, and many, many such other aspects. However, in India, the macro continues to be significantly strong. Tax collections are at an all-time high, and the recent GST numbers give us a lot of confidence. September was a great month with GST numbers at almost 1,47,000 crores, which is the highest number that we've seen. And now for 7 consecutive months, we've seen numbers which are well in excess of 1,40,000 crores. And therefore, it gives us the confidence that despite higher food and fertilizer subsidies, buoyant tax revenues should be able to keep India's fiscal deficit well under control. So much so that I think my memory serves me right, for the first time in many, many years, the government has actually reduced the target of net borrowing by 10,000 crores. And while 10,000 crores in the overall scheme of things in the budget may not be a significant number, but the fact that there is a confidence that the government will have to borrow less and still maintain fiscal discipline tells you that tax revenues are buoyant and how well the fisc is being managed. This, frankly, is music to our ears and lends credibility to the fact that India has managed its macro affairs very, very sensibly. I wanted to share an interesting piece of information which we came across, which is that the amount of stimulus that various countries have done during the COVID crisis and where India stands and what the repercussions of such a strategy have been and how we are benefiting now as a result of our conservative approach to stimulating the economy during the COVID crisis. It is quite staggering to see that many developed countries have spent anywhere between 15 to 35% of GDP as stimulus. And India stood completely different and spent only 3.5% of GDP on stimulus. As you can see in the chart, Japan over 50%, Germany 35%, US 30%, Canada over 20%, UK over 20%, India 3.5%. The point I'm trying to make is that it seemed the right thing to do during the COVID crisis, but as they say, there are always two sides to a coin. When you inject this level of liquidity and stimulus into your system, it was bound to reflect in very high demand and very high inflation. And that is what many of these developed economies are struggling with, which is that they are seeing inflation which is almost 4 times of the normal inflation that these economies have seen because of the massive level of COVID stimulus that was done by many of these emerging economies. India, if you remember, was criticized for not doing enough during the COVID crisis. But at 3.5%, I think we were sensible. And that is one of the reasons why we don't have runaway inflation in India. We do have higher inflation, but most of that is imported inflation because of higher crude and energy prices. But other than that, I think India has been able to manage the macro far better than many, many other large economies. And that is one very important reason, other than earnings that we've been talking about, why the Indian markets continue to stand tall and outperform most other emerging markets and the US market as well. Therefore, I believe that as long as energy prices remain reasonable, given the relatively strong performance of India's macro and a massive tailwind that we are seeing in consumer spending this festive season, we believe that India will continue to outperform most global markets. And as we have been very constructive, we continue to be constructive on the Indian markets. And we believe that we are on to much higher levels given the strength of our macro and the strength of the earnings recovery cycle of corporate India. With this, I end this month's communication. I wish all of you a very, very happy Diwali to you and your families. Have a safe and enjoy the festive season. Until next time.